Welcome to Realtors Roulette. Join Nichole, Elisha, and John as they uncover untold stories, insider tips, and hidden truths about real estate. Get ready to enjoy this episode coming to you from the beautiful Qu'Appelle Valley in Saskatchewan.
Good morning, everybody. Thanks for tuning in. Today, Elisha and Nichole are with Lisa Campion of Cornerstone Credit Union talking about, I want to call them as improved mortgages, but that's not the correct terminology. You have to tell me. Is it?
Yeah, so they're referred to as a purchase plus improvements so that you can add on improvements or renovations to your home right at purchase time.
This is an episode if you're a buyer who is looking at properties and you're feeling frustrated that you just can't find anything within your budget. Your budget is a little bit of a barrier for you because you want everything you look at needs flooring, or it needs shingles, or it needs a new fence. This is an episode to tune in and find out how you can get the best house for you with the improvements that you'd like to make, all wrapped up in one payment.
Giving you the opportunity, if you find the absolute best house in the best neighborhood and you're skipping on it because it does need countertops or it does need whatever, yeah, like Elisha said, this is the episode where you want to tune into.
So yeah, Lisa, why don't you kind of explain it to us if someone does come to you? I just had one where they did a fence and air conditioner.
Absolutely. So some of the things that you want to be looking at is anything that can be affixed to the property. And so it has to be permanent. It cannot be any furniture or appliances or things like that. But if it does need a furnace or maybe an air conditioner needs to be put in, those are fine because they're permanent. Fencing, flooring, kitchen, bathroom renovations, those kinds of things would be all just fine. Like has been alluded to already, it does widen your potential for your buying options. Right. And you can get it done right up front. You don't have to wait for there to be enough equity in your house, because refinancing, you need to have at least 20% worth of equity in your home. And so doing it at time of purchase, you can have as little as 5% down.
So how are the funds handled? Are they having to pay for it up front and then get the money back from the bank, or how is that? Use
a purchase scenario, Nichole. So say let's pick a purchase price. Let's say $300,000. So let's say $300,000, and we put 5% down. $15,000. So we got $15,000 down, and take it from there. What does it look like after that?
Sure. So the example actually that I had prepared was $300,000. So on the $300,000, let's say there's $50,000 worth of improvements that they're looking at. So it takes them up to a $350,000. So that would add on top another 5%, not another 5%, but 5% additional down payment that would be needed on the $50,000.
$2,500.
Correct. So total altogether that they would need down is $17,500.
Okay.
Then from there, the purchase price of the $300,000 plus that down payment and deposit would all go through at the time of possession to the lawyer. Then after that, for the improvement side of things, we would need quotes up front to know what is being done for those improvements, and then evaluation done as well, which depending on if it's referred to as conventional, having 20% down, this one we're doing 5%, so it would be high ratio. Those quotes go over to the high ratio CMHC or Sagen. Then they would do an as complete evaluation to make sure that the $350,000 value is going to be there. Because the $50,000 is over the 10% requirements, the disbursement would be done through invoices. We would send that invoice over to CMHC or Sagen, and then the disbursement would go through a lawyer's office with a 10% holdback for any kind of builder's lien possibility side of things. If it was less than 10%, then we can go through invoices and directly to the borrower.
So less than 10% of the $50,000, is that what?
The purchase price.
Okay,
So if they had taken just 25,000, then it would be just dispersed to the people.
Exactly.
But you mean the disbursements would go directly to their contractor, like their roofer or whoever, like.
Yes, and they would end up still going through a lawyer's office because of that holdback being there for in case there's any liens that could be put on saying a contractor wasn't paid.
So to break it down more simplistically for me,
Sure.
I give you a quote from ABC Roofing Company when I'm applying for the mortgage.
Yes.
And then I get possession of the house. ABC Roofing Company comes and they roof the house
Yes.
$20,000, say.
Sure.
for $20,000, and then the lawyer's going to pay directly to ABC Roofing a
Yes.
check once it's done.
Correct.
And you said, just to roll back, just for clarity for myself, Sagen does an evaluation.
Yes.
So what is that? Like, so do they dispatch an appraiser? Do they have somebody in-house that does it? Does that cost the buyer to do a quote-unquote evaluation?
Great questions. So with that, the Sagen or CMHC does work with certified appraisers, and they would send somebody out and arrange that with the person who is going to be selling and with the realtor that is involved. The other side of that is that there is no cost then to the borrower because it's covered in the premiums that get paid with the mortgage when it is high ratio. So the premiums that get paid to CMHC and Sagen. So no, there's no out-of-pocket cost.
Okay.
So what if it was someone that actually had a scenario like this on something? So she was buying the shingles, but her son was going to do the roofing. But they weren't allowing the labor. Like they said that, yeah, they'd only supply her for the shingles, but because it was her son doing the labor that she couldn't invoice the labor out.
Right. And so with that, if there's family, friends that are helping out, or if you are going to do the labor yourself, you're right, you wouldn't be able to unless, let's say I'm buying something and my brother is a contractor or he does work with a flooring company and can invoice me through their business, that would be different.
That makes sense.
Yeah.
So what is some examples of things that you've seen a little bit unorthodox that have been paid for through Purchase Plus improvements?
Yeah, so some of the things are like if they're looking at doing larger even additions or moving a wall, let's say, to open up a space. So it's really about seeing the potential that's in houses and there, right? And I love that people can maybe go in and, like myself, I'm very visual, so I may not see all of the potential things, but having somebody in my corner like you guys going, hey, wait a minute, wonder if we knock this wall out and make this into a potential walk-in closet or whatever they're dreaming of kind of thing. Unorthodox, the only question I had come up when I said Purchase Plus improvements was one person had said, well, I'll bolt my couch to the floor. And I said, sorry, that still doesn't work as a permanent fixture.
If I'm a buyer and one of my most wished for on my wish list is a garage,
Yes,
can I build a garage?
absolutely. And it doesn't have to be necessarily attached. It can be a detached garage
That
as
was
well.
my next question, right?
Yes. Yeah, it sure could.
And what is the maximum amount that somebody can get for?
As improved.
Yeah.
As improved, you don't want to be more than 50% of your overall purchase price because then we get into more of a construction
Right. That
mortgage
makes
as
sense.
opposed to a Purchase Plus improvements. So your majority of your funds have to be going towards the purchase of that home.
Right.
Okay.
So of a $300,000 purchase, $150,000 would be the max absolute before you had to swap over to.
That's
Gotcha.
right. That's right. And the other thing of this is that it doesn't have to be necessarily just on your primary residence. So if you're purchasing maybe a rental or you're looking at a vacation property, the down payment requirements change a little bit on it, but it is still something that, again, can be done at time of purchase.
Wow. So if I wanted to, say I had a cottage and I wanted to add a bunkie that I could potentially Airbnb out, Is that something that Purchase Plus improvements could potentially pay for?
Absolutely. So with that side of it, not one criteria, but part of the criteria is that it would have to be over 3 seasons and winterized and be able to have access to it. Then we could do 5% down.
Awesome.
If it was a 3-season property and not accessible all year round, then we're looking at having a minimum of 10% down.
That's really great. Potential for people to, really put their own spin on whatever their imagination can dream up.
A real quick question, and when you were saying that the lawyer gives out the disbursements after the work is done, is there a way, like say I had 6 projects, say I had flooring, countertops, paint, and I wanted to build a deck. So I had 4 projects going on. Is there any way to simplify that by either putting more cash on it? So I have a bunch of, $2,000, $3,000 jobs. 6 of them, 5 of them, whatever. Do all those funds have to get dispersed through the lawyer, or is there some leniency that I could pay the countertop company and the flooring guys and the painters, or do they all have to go to the lawyer's office?
They don't all have to go to the lawyer's office at all. If you've got cash flow or credit card or something that you want to utilize and pay, then you can go ahead and do that. And what we would get is the receipt then to show that there has been proof of that payment, or we would follow the funds is what we like to refer to it as. Yeah. And so as long as we have the proof there and it's under the 30,000, 20% kind of threshold, then we're fine in dispersing out to you as a borrower directly with receipt.
Perfect.
The other side of that brings up a really good point as well. So if you've got let's say 6 projects on the go.
Yeah.
And each of those projects maybe is going to be, $10,000 for easy figuring. With that, there's only 4 advances or disbursements that the high ratio insurance company will cover. So if you're looking at 6 projects, try to get that disbursement down so that you can maybe do a couple together. So maybe the flooring and the cabinets can go together, and the garage and the deck could go together. Or if the contractor is looking after all of the plumbing that needs to be done in the furnace side of things.
So what would happen if I was going to spend $350,000 and I ended up scratching the fence and only spending $340,000? What would happen to that $10,000?
We would need to see how that would affect the overall as complete value.
Okay.
And if the fence was not completed then or done, we would need to make sure that CMHC or Sagen can sign off on that.
Okay.
And then those funds just wouldn't be dispersed.
Okay.
The payment though would still have been based off of the $350,000. And so if somebody wanted to move their payment down, they would be looking at doing an amendment with us.
Okay.
But we would have to sign off and say that that's okay.
Okay. And what about timelines?
Timelines, we usually have a year. If there is something like, let's say you are looking at the end of the season in summer, and so maybe things cannot be done because of seasonal work, we can look at pushing out 18 months, but we really want to be within the time frame so that quotes and things don't end up changing.
Yeah.
So you usually have about a year, 12 months from possession.
And I can I differ from my quotes? So if I said I was going to do flooring, but then all of a sudden I want to change my countertops instead, but it's going to be the same price?
Yeah, so that really depends as well. And we do have that question come up. Or is what ends up happening is they open the wall up and there's something else that ends up needing to be done, right?
Yeah, can of worms.
And so really, again, it comes down to, is the as complete value still going to be there? Are we going up or down in value side of things? So for instance, some people will get in and they'll no, I'll do laminate, and they get it. Maybe we should do hardwood flooring. right? Or they upgrade the underlay and the carpet side of things,
Sure.
right? Again, what are we really doing as far as moving those funds around? Don't really want to stray away too much from the original quote, and it would be reviewed on a situation basis is my
Okay.
best answer.
Okay, that's a great amount of information.
This is huge information. Like from what I recall from like doing as improved mortgages to the way you're explaining it, it definitely like simplified it, streamlined it a lot for the consumer. Like before, yeah, it used to be a scary thing.
Most people can't do that. That's why they're doing cost plus improvements, right? They don't have the funds. Otherwise, they would just pay for it after they bought the house.
Yeah.
Absolutely. Absolutely. And it's nice because it adds value to your home immediately.
Yeah.
Again, you're not needing to wait for that equity to come up in your home for 5, 7, 10 years, depending on where you're at as far as location and being at the mercy of the market values and things like that as well. So, yeah.
And as an agent, should I be allowing for extra time as writing conditions?
So one of the things with having the need for quotes,
Okay.
that is something to consider as well. What we have told people too is if they're doing some of the work themselves and are handy that way, then you can go down to your local Home Depot, Home Hardware, Rona, wherever, and get somebody to maybe do up a full quote for the deck, which would include all of the screws, all of the lumber, all of that kind of things. And maybe you and buddies are going to be putting it together. And then somebody would come out, inspect that work has been done with, again, that invoice, and then we would disperse.
Yeah. Yeah. So if you, for example, built a garage in the spring, but then you didn't want it, like you weren't able to finish your roofing until the fall, is the appraisal or whoever comes to inspect, does he come more than one time?
Yes, and so that would likely happen in 2 different bouts.
Okay.
So we would do for the garage, and then we would do for the roof side of things. And with whether it's conventional or high ratio, usually 4 is around what they'll do for the improvement side of things. Not to say that you have to take all 4. If it's conventional, you've done your 20% down, you're not going through Sagen or CMHC, you're paying for those inspections and your evaluation out of your pocket.
Okay. Good to know.
Yeah.
Yeah, I think that pretty much covers everything. Makes me a little bit more clear because, it's kind of one of those ones that we don't want to do it, right? So just have a little bit more information for buyers on exactly how the process works, I think is really good. And I think the credit unions may be a little bit more flexible with cost plus improvements too, just from hearing from some other banks and the process, like the paying up front and not.
So the benefit for a buyer would be to roll those payments all into one mortgage payment at the same interest rate as you qualified for, and not at a line of credit or some other credit card interest rate.
Exactly. So then you have one payment you're worrying about. You've got one nice interest, right? So on my example, and current rate is nice and low here at 4.79% currently. And that is also tailored to the individual. So that's as low as could go. However, it could be 5.25%.
Sure.
But again, usually it's lower than your line of credit or your credit card
Right.
facilities.
Absolutely.
Yeah.
Do you have any questions for us?
So I guess just when you're going through and different things like that, when people are looking at improvements and things like that, are there people in your back pockets that you could refer? Because I don't necessarily have contractors or necessarily, I would be like, who do you know and trust? And usually that'll be their realtor as well. So
We always can defer to some kind of everybody knows the guy. It's part of the business.
yeah, absolutely.
Everybody's got a painter in their pocket.
For sure. And that's actually a good one too, is that if there's paint that needs to be done, like we were looking at doing our 2-story home and getting it painted or even siding kind of things, again, that can all be done because it was supposed to be upwards of 15 to 20,000 to do our intricate 2-story house. Paint is one thing that definitely could be a part of your purchase plus improvements.
What a big improvement that makes. Like, to change out some light fixtures and paint your house and put in new flooring can take a drab 70s bungalow to a modern, whatever your taste is. It can easily be changed and you can get your dream home.
Absolutely.
Even on a modest budget.
And to add to that, we can do landscaping.
Oh, well.
So even if you're like, hey, I want to put in this or take those trees out or put in this driveway, again, that can be a part of it too. So dream home and dream yard.
Let's make it happen.
Exactly.
Isn't that wonderful? Any other points that we should touch on?
I think so. If there is questions that people do have, by all means, there's information that is on the Cornerstone Credit Union website. My information is there as a mobile mortgage specialist as well. And definitely they can reach out to you guys and you can always ask.
Is there a phone number you could leave for anybody that is listening to this podcast if they do want to reach out to you?
For sure. My direct number is a cell phone as well. So it is 306-550-6554. And with me being a mobile mortgage specialist, I'm not just within the confines of banker hours. So definitely reach out via text or give me a call.
Okay, thank you very much for
Guys,
coming in today.
that's Lisa Campion with Cornerstone Credit Union with us today, and thanks for tuning in.
Thanks very much for having me.
Thank you for tuning in to Authentic Realty's podcast. Follow, review, and share this episode to spread the knowledge. To connect with your favorite local realtors, call 306-695-HOME.